on the Schwab Network. It's time for our cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right, so we're talking Best Buy. You know, we talk about this one about every quarter. Maybe it doesn't get the headlines like it used to, and I don't know who still goes to Best Buy. I posed that question in an unofficial Twitter poll. But Landon, does your data support the weakness that we're seeing in the shares so far in 2024?
Yeah, so you know what? I'll make a bull case and I'll make a bear case. I'll start with the bear case. So last quarter, I mean, they forecasted a decline in revenues for 2024. They're announced layoffs, cost-cutting measures. They're closing 10 or 15 stores. The web data that we've got has been going lower for years, with a much decreased last little holiday session versus the previous one. The 90-day moving average is negative 19%, and the 30 days negative 21, suggesting that decline is accelerating. And when it comes to electronics, 39% of purchases are made online, and I don't think that people really equate Best Buy to online. They think about going in the store more than anything. If you think about buying electronics online, you're thinking Amazon. They control about 41% of the market share, and really right now, this entire sector, the consumer's kind of hurting. I mean, retail slowed in April versus March. I think it was flat versus the plus 0.4 expectation that we were looking for. Compare that to last year, was plus 3%. So the retail is starting to hurt, especially in this area. And then the last thing is happiness. They're trailing Amazon, they're trailing Costco, and Costco isn't exactly a direct Best Buy competitor, but it kind of is, in that if you go into a store, you've got a 150-inch TV for $20 basically at Costco. I mean, it's insane the deals that they've got out there. But if you're going to a store to buy electronics, Costco is top of the mind, as is Best Buy. But if you're going online, it's pretty much Amazon. So they don't really have a strong position right now. That's the bear case. The bullish case is, like I said, they're doing some cost cutting. But I think, honestly, the strongest bull case is the stock price. I mean, if you look a year and a half ago, this is $142 stock. It's now $72. We're currently working on our 9th down week in a row. So expectations are just super, super low. They've already said that revenue's down in 2024. So, there's not much more bad news that can come out. So, when it comes to an earnings play, I think you have to take that into consideration, because everyone kind of knows that they're hurting right now as a business, and they're on the lower side of a pretty sideways year for them so far. So that's the extent of the bull case. As it's been, a lot of this is priced in and it's very low. But I will tell you, Tom, you asked the question. We just recently did some remodeling that include buying a couple TVs. And I went to a Best Buy, and it was actually, I saw a lot of value there, because I was able to ask some questions and get good answers. And then when I picked the one that I wanted, I went online and looked on my phone, and it was basically the same price on Amazon. So I said, you know what, I'll just walk out of the store with this one today. So they got my business because of the expertise in the store. But I don't think a lot of people go that route. Most people just go onto Amazon, they shop specs, they compare prices, they pick one, and it's at their house the next day or 2 days later. So, Best Buy's in a tough position right now, but the best thing they have going for them is the low expectations.
Landon, it's like everyone thinks that Best Buy will do well if it's like 2008, where the TVs get reinvented, right? And everyone needs the new TV. But their CEO, Corey Berry, comes out and says, as long as there's consistent innovation, we do well. We don't need the new Apple iPhone. We don't need new TVs. As long as there's small improvements, which, let's face it, PCs are all going to have AI in the next year or so, and people are going to need AI-based computers. So not only is the stock inexpensive, like you mentioned, the PE is extremely low. It has a 5% dividend that we don't guarantee, but it has it. It's there. So there's a lot of good things about the stock, and this company is efficiently run. They manage their expenses, they manage their head count, they're constantly adjusting, waiting for that next big cycle to come up. I mean, Landon, here's my question to you. Your data doesn't look great. on it, right? But at the low end of the cycle, isn't this the time to start looking at this?
Yeah, exactly. I mean, our data agrees with the move in the stock price. Everything that they said on their last report, everything that we see in our data suggests that this company should have been selling off over the last little bit. But you'll notice in that last earnings report, it wasn't so much about the numbers; it was about the commentary and the forecasting. So I think that's what we're going to see again. I think that the numbers, obviously, they're important. Everyone wants to know how much money you made the last 3 months, but they want to see if analysts and investors want to see if the outlook for 2024 has changed at all, because it was just kind of, it's not going to be a great year, right? That was kind of the summary of the call. And of course, it's going to sell off and it's going to continue to sell off. So, yeah, but long term, I do like this company. They're in, they kind of have a monopoly somewhat. I mean, if anyone remembers Circuit City many years ago, that was
Sure.
the competition. Costco's kind of there on the front of the store. Amazon online dominating. But when it comes to going into a store and getting expert advice and looking at all the different options and walking out with someone, it's Best Buy. So it's a strong company, well run, just like you said. And if you're looking to pick up shares, this might not be the worst time because it's so cheap. And I think really everything is priced in. All the bad stuff is priced in. Everyone expects this to be a bad quarter. So this just could be a kind of a relief, like, okay, it's going as they said. So, maybe 72 is a little low. Let's buy this up to 75 or 78, something like that. It could very well be that kind of report.
Yeah, last quarter, this stock spiked to $86 a share on their results, on their cost-cutting measures. Even though sales decreased, same-store sales 4.8%, they're expecting another decrease of down 5%. So that's there. Is this all about traffic? Because as you mentioned, competing against Amazon and the e-commerce space, you can, if you're in the store, yeah, maybe you walk out with a TV like you did. But at the same time, if they don't have good traffic, Landon, is that the caveat to this? And do you have an earnings score?
Yeah, they've got to turn that around because just like I said, it's almost 40% of electronic purchases are online, and it's so easy to compare. It's not like clothes where you got to try it on. You can just look and tell me what the specs, how big's the TV, how much RAM's on the computer. You can just go spec by spec and compare the exact same item at two different places. And it's so easy. Amazon has done such a good job of dominating that space that Best Buy has a lot of catching up to do. And like I said, their decline is accelerating right now. Not tremendously, but from negative 19 to negative 21, when you zoom in on moving averages, it's just not great. So we need to see that, level out and start to increase on a year-over-year basis, take some of the pie away from Amazon. That, I think, is the road to prosperity. Right now, our earnings score, because of what the stock has done, is only at a -8. So we're basically neutral, just kind of, on the sidelines a little bit. If this was a $100 stock, it'd probably be -50. But because of where it's at, it's priced pretty well. And honestly, I don't think there's a lot more to the downside. I don't think they're going to have a great report, but I think everyone expects that.
All right, great stuff, great data. As always, Landon, I'll stick to the beginning of the Costco stores when I'm looking for TVs. I like that area. Kind of hits you in the face right when you walk in the door. All right, great stuff. Appreciate it, Landon.
Take care. Thanks.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data for us.
That is a strong sales point. You walk in Costco and right there are the big TVs.
I know.